Hello guys, in today's video I will analyze 4 pharmaceutical stocks that were requested from you guys. Inovio, AstraZeneca, Pfizer, and Abbott Laboratories. But before starting, I just wanted to let you guys know that last video I announced my Discord chat completely free for any of you that might be interested to get in. The link is down below the like button and above the 2 free stocks with WeBull. Please smash that like button since it really helps my channel out. Now, something that I have to mention before doing a quick analysis in each company are my thoughts on the industry. Some of these stocks are likely to rise during the race of the vaccine, but the bad thing is that when one company gets the vaccine, the prices for the other companies most likely shrink. Currently, there are 140 vaccines being tested and in different stages of trial around the world. According to the World Health Organization, 16 vaccine candidates have entered into late stages trial. 5 of them are in China, 3 here in the US, 2 in the UK, and 1 in each Australia, Germany, and Russia. I do have to say that pharma companies spend a lot of money in research and development, which is very expensive, and normally they make a lot of money, but when their patents run out, their revenue starts to dry up. First company and the most requested one is Inovio Pharmaceuticals, ticker symbol INO. It has a market cap of $3.34 billion and is the smallest company in this list. They are a pharmaceutical company that works mainly with DNA to combat different viruses and diseases. The stock was up 887% for the year right before this downtrend, and right now it is still up 559% year to date. It dropped 37.74% in 2 days because of vaccine results for phase 1 clinical trials. Even though they announced positive results, considering their vaccine safe and well tolerated, they did not disclose any information about how many patients produce antibodies, which is very important since that is what prevents anyone from getting infected and is the information investors are always looking to analyze. Still, investors are basically betting on a good outcome and expecting the FDA will allow Inovio vaccine to move to phase 2. As I said, their revenue fluctuates a lot because of what I mentioned at the beginning, that when their patents for a drug run out, their revenue dry up. Still, this company has never been profitable and it looks like their net loss just continues increasing year over year and quarter over quarter. Surprisingly, their cash on hand increased 200% as well as their long-term investments by 235%. So they have a total of assets of $333.9 billion and a total liabilities of $151 million, which means that they have a total liabilities to asset ratio of 0.45, which is surprisingly good. Now, we can see that they have had negative cash flow from operating and investing activities, but it increased from financial activities since they issued $208.2 million worth of stocks. Would I buy Inovio stock? Well, the stock is up more than 500% already year to date. They have huge competition right now with the virus vaccine. Yes, they might be on the right track, but are definitely not winning the race. I would trade the stock or do a spec play, but would not hold it for so long because I think that any good news are already priced in, and one single bad news already caused a huge drop of almost 40% in 2 days. Imagine if they come out saying that their vaccine does not work. They might be good in their DNA studies, but do not think it is a good and safe investment for my portfolio right now. If the stock was cheaper, maybe I would consider it, but at today's valuation, it's impossible for me. Next company is AstraZeneca, ticker symbol AZN. Their company discovers, develops, manufactures, and markets pharmaceuticals for important areas of healthcare such as cancer, gastrointestinal, infections, respiratory, and way more things. They are probably the world leading candidate and most advanced company in terms of development because of how advanced they are. AstraZeneca operates in multiple countries and is focusing on emerging markets since it represents its largest market by product sales and it's a huge commercial opportunity for them. They are also trying to find the vaccine for the virus, but they are already in phase 3 clinical trials competing with Moderna's vaccine. On June 4th, AstraZeneca inked a $750 million deal with the Coalition for Epidemic Preparedness Innovation to manufacture and distribute 300 million doses of University of Oxford's vaccine by the end of 2020. Also on June 15th, Italy, Germany, the Netherlands, and France agreed an initial $843 million deal for the vaccine. Last but not least, they reached a supply deal with Brazil. As Brazil got hit very hard by the pandemic, they decided to partner with AstraZeneca by closing a deal valued at $127 million to produce doses of the vaccine, which are likely 30 million doses. This company has a market cap of $138.57 billion. Their revenue increased at 10% last year, and on a quarterly basis is slightly recovering quarter over quarter. They have a profit margin of 6.03%, which is low for the industry, but at least they are profitable. Also, remember that in the pharmaceutical business, they spend a lot of money in research and development. I have to say that I do not like their balance sheet since they have current assets of $12.8 billion and current liabilities of 17.04, meaning that they have a current ratio of 0.75, and I like to see that number at least above 1. Also have a total asset of $57.2 billion and total liabilities of $44.99 billion, which leaves us with a total liabilities to asset ratio of 0.78, which is really high. They are very advanced with the vaccine and have huge deals with different countries. It does not mean that they have the best vaccine available, it just means that they are farthest along the process. I do like the stock, but I'm wondering if the good news about the vaccine is already priced in. I mean, look at this, the stock is almost at all-time high. Third company is Pfizer, ticker symbol PFE. It has a market cap of $192.58 billion and a PE ratio of 12.05, which is way lower than their industry and their 5-year average PE. They are one of the world's largest pharmaceutical companies. They release already very positive results from their vaccine, which is still in early stages. They stated that their vaccine produced neutralizing antibodies, which is very good news. Pfizer still need to do more studies to see how well it can really protect and how it affects the body. Other than the virus vaccine, they have new drugs and a deep pipeline to drive long-term growth in the company. They have been developing treatments in the field of oncology, rare medicine, immunology, and more. Mainly studies in areas which the company believes it can take a leading position. Pfizer offers a dividend of 4.51% and has a current payout ratio of 54%, which is way better than their previous 12-month trailing payout ratio of 74%. They have been increasing and paying their dividend for years, even with the pandemic. Their revenue fluctuates as well, but is more stable than the last companies we analyzed and has a very good profit margin of 31.17%, which is way above the industry average. Checking their balance sheet, I noticed that they have a good total liabilities to asset ratio of 0.61. It's not the best one, but it's pretty good in comparison to other companies. Would I invest in this company? Yes, I would. I like the valuation, and in my opinion, they offer very nice potential whether or not they are the winners with the vaccine. Last company is not competing for the vaccine but plays a huge role right now with the virus. This company is called Abbott Laboratories, ticker symbol ABT. Currently has a market cap of $163.62 billion and a PE of 46.28, which is way lower than their 5-year average PE and almost the same as the industry. Abbott Laboratories has different life-changing technologies. They are the global leader in infectious disease testing. Abbott Laboratories developed the first HIV test, and right now they are distributing new tests for the virus for frontline workers so people can receive critical results fast. Their method can deliver results in as little as 5 minutes and also offer portable testing for anyone outside of a traditional hospital, such as an urgent care or physician offices. They also offer antibody tests, which is the one that tells people if they were exposed or infected by the virus before. Abbott Laboratories offers a dividend yield of 1.57% and has a very high payout ratio of 73%, which at least is lower than before. Their revenue has been massively increasing year over year, even though their net income fluctuates a lot. They have a very nice profit margin of 11.15%. I do like their balance sheet since they have a current ratio of 1.44 and total liabilities to asset ratio of 0.54. I have to say that between the three companies I mentioned competing for the vaccine, Inovio, AstraZeneca, and Pfizer, the one that I like the most is Pfizer. Yes, I like AstraZeneca since they are leading the race with the vaccine and have a lot of good deals, but did not like their balance sheet. And if I were to invest in any of these companies, I would invest for a very long term, and I liked more Pfizer as a company and their valuation since they already offer a very nice potential whether or not they are the winners, as I said. In the short term, AstraZeneca might be the best one between those two if they come out winning the vaccine race, since that could bring them a lot of good opportunities as well. But would have to wait and see. I also like a lot Abbott Laboratories, even though it is a little bit high right now. I think that they have a lot of potential. I would have preferred buying the stock in March, but well, I couldn't. Do not forget that you have the link to the Discord chat down below in the description. Please don't forget to subscribe and smash that like button since it really helps the channel out. Thank you and see you next time.